banks are one of the engines of the modern economy, but the way they work is under threat.
Companies everywhere are exploring blockchain integrations.
Crypto may finally be going mainstream.
This could change everything.
In 2009, Satoshi Nakamoto, creator of Bitcoin, published a paper with a simple message addressed to the banks: "You're obsolete." It was a protest against the traditional banking system that controls your money. The technology he created initially didn't attract any interest at all and was used only by a few people and don't meet any support from the traditional banking system. 14 years later, in 2021, Visa announced that it will allow the use of USDC. It is a stablecoin backed by the US dollar to settle the transactions on its payment network over Ethereum blockchain. Visa said that is piloting the capability with Crypto.com, a crypto platform. In 2023, JP Morgan confirmed that their blockchain division has conducted a successful simulation to test the technical feasibility of cross-border transactions and now process more than $1 billion daily in crypto transactions. In December 2023, Swiss National Bank launched a pilot to integrate the digital Swiss francs into real-world transactions. In 2025, the UAE officially started using technology to transfer real estate deeds without using notaries and lawyers, which decreases the cost and time for all that paperwork. I guess the tables have turned. Bitcoin wanted to destroy the banks, but now banks are racing each other to adopt it. Here's why this revolution affects your wallet, regardless you own crypto or not. First, I would like to tell you about the technology adoption paradox. At this point, even the laziest person has heard about Bitcoin and cryptocurrency. We now live in a world where digital money is quickly becoming the norm due to its flexibility. Technology is evolving, so money and currency exchange also evolving with technologies. When I was in a university between 2009 and 2011, QR codes were just emerging. It was more theoretized than used practically. Though, I remember doing a lab project where we converted text into QR format. And now we use them every day, almost for everything. And that only happened because the infrastructure finally caught up. Our latest phones got updated with built-in QR readers, and scanning became seamless without the requirement of specialized applications. According to the State of QR Codes 2025 report, 59% of customers scan QR codes daily, and they are not just scanning to check out a menu. Businesses are embedding QR codes deep into their operations, solving real problems from tracking supply chains to securing access to sensitive data. This is known as a technology adoption paradox. Attach isn't widely used until all the support tools exist. Once that happens, it feels like the shift happened overnight, but it didn't. Same with money. Can you count the number of times you have had to scan a QR code the past few years? I cannot even imagine. By the end of that video, you will understand how inflation silently steals from your savings with the help of simple math. What blockchain is doing to banks, like what an email do to fax machines. How the investment world is changing now, and how you can own a digital deeds like in the UAE. In other words, it's called tokenized real estate, the technology that make property investment more accessible to almost anyone. And you can start invest with this technology with $100 in the properties that before worth more than $100,000. No technical jargon, just what matters for your financial future. Let's begin. Towards the end of the barter system, money started as shells, then metal coins. Later, governments dropped the gold standard and started printing money backed by, well, absolutely nothing. This is the Fiat system. And today, money is just a bunch of numbers on a screen, easily created, endlessly printed. But us, regular people, we don't get a say in how much is printed. We only lose buying power, quietly, year after year. So, what is inflation? Inflation is the decrease in the purchasing power of money when compared to the general increase the prices of goods in an economy. Let's say you have saved $100,000 for a house. The global money supply was $1 trillion and the government prints another trillion. What happens? You don't get an access to any of that, but prices go up across the board and your $100,000 now buys just a half house. That's inflation in simple words, and it quietly robs everyone who doesn't understand how money works. First part. Digital gold. As a response to the ever-rising inflation, Bitcoin and crypto emerged. A digital currency with hard-coded rules, a fixed supply, a transparent ledger, no centralized authority. It gave to people a way to opt out the fiat system, to hold something deflationary, predictable, and trustless. Exactly why it's called digital gold. How does the digital gold work? Bitcoin is the currency, but blockchain is the tech underneath. It is a distributed and unchangeable ledger, basically a recording that cannot be faked or duplicated. Perfect for tracking ownership, balances, contracts, and more. Bitcoin isn't just internet money. It is a programmable, limited digital resource, like gold. But it's easier to transfer, impossible to fake or replicate, and it's virtual. From the beginning, the Bitcoin mining supply was capped at 21 million coins to ensure no backroom deals, no silent theft. Part 2. Smart contracts. People understand the benefits of technology pretty quickly when they start using Bitcoin, and they realize that technology has brought a future, but it's still relatively young and requires significant improvements. That's how Ethereum appears, created as smart contracts, programs that automatically execute transactions when predefined conditions are met. The phrase smart contract or crypto contract was first recognized and coined by Nick Szabo in 1994. On the Ethereum blockchain, these contracts are computed programs that directly and automatically control the transfer of digital assets between the parties under the certain conditions. For example, if you send me 1 Ethereum or 1000 USDT, then you will automatically receive another token or digital asset, such as token or certificate, in return. A smart contract is just a digital contract with the security coding of the blockchain. No lawyers, no banks, no middlemen, just code. The transaction is not only trustless, but is also irreversible and secured by the blockchain. For example, imagine selling your car. The buyer sends crypto. The smart contract instantly transfers ownership. No notaries, no DMV lines, no paperwork, no delay. Just instant ownership transfer. This speeds up economy and removes friction. Instead of relying on trust in people or banks, we now rely on code. That's a major shift. In fact, Ethereum is considered a much stronger platform compared to Bitcoin because developers can make custom contracts in a Turing-complete language, which is a fully expressive programming language compared to the Bitcoin scripting language, which is intentionally limited and not suitable for general-purpose application development. Part 3. Tokenization from COVID to binaries. Crypto is great, stocks are fine, but they are quite volatile. On the other hand, real estate is stable, the asset with which you can save and increase your capital. It gives people a way to earn passively and preserve wealth. We started building our tokenization platform, Binaries, in 2019. At first, the idea was to tokenize small businesses. Then COVID-19 hit, and we see how businesses are struggling, and some of them even come to bankruptcy. And we make pivot to real estate. The real estate has clear cash flow, and it's perfect asset for save and create capital. Additionally, it's easier to explain and even easier to trust. And thanks to blockchain, we can finally open it up to everyday investors, even with small amounts. Our platform allows people to track a property entire life cycle on chain, how much it earns, how it performs, what happened in the past, and based on the data, you can predict how much it will yield in the future. So I have several advices to my viewers. For crypto beginners, take the first step to understanding blockchain and digital notary. Observe how international platforms like PayPal or Visa have adopted it. For investors, allocate from 1 up to 5% of your budget to blue chip crypto like Bitcoin or Ethereum. Explore our tokenized real estate on Binaries and invest in the tokenized properties. And for the tech lovers, try to send $5 via crypto to a friend or family in other country and feel freedom of crypto and learn smart contracts and the benefits of it. History favors system that cannot be manipulated. The question isn't if crypto wins, it's how much you and I will benefit by understanding it early. Which would you trust more? Paper that can burn or math that is continuously being verified by thousands of computers worldwide? The future is trustless and efficient. Trust no longer needs to be enforced by banks or governments. The middleman is long gone. Now trust is enforced by algorithms and math. That is what makes the blockchain revolution so powerful. It frees time, cuts costs, and makes systems faster and fairer. And it's already happening. Finally, if it's made you rethink how you save and invest, hit subscribe and stay tuned. In the next video, we will make the real estate easier with our tokenization platform Binaries.